gold and silver are not important, I would just say, just watch. You're going to find out. Uh, in my opinion, silver will fail to deliver probably in the March, April timeframe. When I say fail to deliver, I think they're going to go force majeure and they will deliver cash instead of silver. And what that tells you is that the contracts are worthless because uh, if you can't perform. And my past partner, Jim Sinclair, used to always ask the question, what is a contract worth if it cannot perform? And the answer to that is zero. I mean, I've recommended now for probably 10 years because of the gold to silver ratio that people be at least 70% silver and only 30% gold. And I told people I don't have a problem if you go 100% silver because the idea is when the ratio comes down, then you swap some silver for gold and you'll end up with more gold ounces than if you just bought them outright.
The final and most terrifying effect of the silver shortage, so we're switching over to silver a little bit, will be the great lockout as governments and corporations realize that silver is not just a monetary metal, but a strategic one. They will move to secure their own supplies at any cost. They will buy mines, they will nationalize production, and they will shut down the retail market completely. The day is coming when the average investor will no longer be able to buy physical silver at any price.
The action in silver over the last 3, 4 months, the move, up to hit 50 through 60, 70, 80, 90. That move shows that the suppression scheme is failing. And the reason it's failing is because COMEX is primarily a paper market, yet the cash markets around the world are all trading much higher than COMEX. So you've got to ask yourself, what's the real price? Is the real price determined by paper contracts, or is the real price determined on exchanges that are cash and carry? I mean, COMEX last night in China closed. I'm sorry, silver in China closed at 91.50. That's $10 over US prices. So what's the price? Is it 101 or is it 91? It's clear that the paper scheme is failing. As soon as silver goes failure to deliver, gold will follow. And when you have contracts that are not performing, then you're going to have traders asking, well, what's next? Is wheat next? Is nickel? Is copper? Is oil? You name it.
The paper silver market is breaking. As physical silver trades at higher prices globally, COMEX struggles to deliver real metal, signaling a deeper failure in the financial system. A forced cash settlement in silver could trigger a collapse in confidence across derivatives markets, which are several times larger than all global assets combined.
And understand that the derivatives complex is probably at least 4 times the size of all the assets on planet Earth. So it's truly the tail wagging the dog. Everything was financialized, and that whole thing is going to unwind. Understand that the carry trade started because rates had basically been zeroed out in Japan. Rates were much, much lower than the rest of the world. So what they did was they borrowed in yen at yen interest rates. And when they pay back, they're going to have to turn around and buy dollars to do that. But the higher interest rates, I mean, rates had gotten down to basically 0.25% on the 10-year and maybe a little bit higher on the 30-year. Those rates now of 30 years, 350. I'm sorry, not a 30-year. That's a 10-year, I believe. What that's doing is it's squeezing the borrowers, and it's making it harder to carry. And then the yen dollar relationship is making it harder to pay back. So that capital that was borrowed by the carry trade went into bonds, went into stocks, went into assets basically, and supported them. As far as gold and silver are concerned, some of that carry trade money has been used to suppress the price of gold and silver on the paper markets. So understand that once the carry trade busts, then the bid under traditional assets, stocks and bonds, is going to it will falter, and the way they have to close the position out there is to sell. The way they have to close the positions out in gold and silver, they have to buy because they've already sold. So that is impetus for much, much higher prices.
With the Japanese carry trade unwinding, liquidity that once supported stocks, bonds, and paper metals is disappearing. Central banks are dumping treasuries and accumulating gold, while governments and corporations move to secure silver as a strategic resource. This sets the stage for a potential silver lockout, where physical metal becomes unavailable at any price.
Right. The U.S., in order to keep the doors open on a day-to-day basis, has to borrow. We spend more. I mean, the debt is rising now by what, $5 or $6 billion every day. And the world de-dollarizing, meaning no longer participating in U.S. Treasury auctions, means there's less buyers. Who's going to buy the treasuries that the U.S. Treasury must sell in order to fund day-to-day operations? And the answer to that, ultimately, the buyer of last and only resort is going to be the Federal Reserve. That is, by definition, monetization. And all you have to do is look at what has happened throughout history whenever a government monetizes, their currency blows up. The problem with the dollar blowing up is that it's the world's reserve currency. Central banks all over the world hold U.S. treasuries on their books, and that has been a core asset. The fact that foreign central banks and treasuries are turning away from U.S. treasuries and buying gold tells you they see an event coming with the U.S. Treasury market. Exaggeration.
Yeah.
And it could happen anytime with no warning.
Yeah, and it's ironic, Bill, because back in 2021, around the same time of the year, there's the silver squeeze movement, and that failed. And I think it failed because it was a movement like by retail.
Jim believed that the final episode, and that's what we're in now, gold and silver would reset to higher numbers and not come back down like they did in 1980 and 2011. Uh, one of the things he used to say, and I believe it's correct now today, that this is the rally you don't sell. This is the rally you don't try to trade. The reason being, we're going to wake up one day and, like you just talked about, there's not going to be any metal available to buy. So if you had sold and taken a profit, where are you? You're sitting in Federal Reserve notes without the ability to get back into silver or gold. We're going to have hyperinflation in dollar terms, and we're already having massive deflation in gold and silver terms.
Yeah, no, I agree. Yeah. And Jim always used to say
It
that.
depends.
Sorry.
I was just going to say it all depends on what you use as your measuring stick.
Yeah, and I've been noticing that, Bill, because uh, I was looking at a car, and the same equivalent car 20 years ago cost like 300 ounces of gold, and now it only costs 30. So that to me is a deflation.
There
But
you have it.
yeah, yeah, yeah.
But it
So
costs more in dollars.
yeah, a lot more in dollars. Yeah, and I think
There's
that's
your
one.
inflation.
Yeah, I think that's one of the big mistakes people are making, major, investors and the general public and the mainstream, is that they're looking at the stock market. They're looking, here in the UK, they're saying, oh, the FTSE broke 10,000, but they're not measuring it versus gold or silver that have been measuring sticks for thousands of years. And I think they're going to lose out massively if they don't have a little bit of gold and silver.
Yeah, I've written, I mean, I could go back and I'm sure dig some stuff up from 2007 when I first started writing regarding this question of inflation versus deflation. And my standard answer has been we're going to have, and it's proven out, we're going to have inflation of the things you need and deflation of the things you have if you don't have gold and silver. Yeah, I think you need to have the mindset that you need to protect yourself because no one else is going to do it for you. That means getting yourself right uh, spiritually, physically, mentally, financially. Uh, have the mindset that you've got to do things yourself because if you dial 911 at some point, no one's going to answer. So, what's the checklist of what you need to survive? And go through that and we're talking about food, water, energy. Do you have the ability to clean water? Do you have anything that can produce any electricity if the grid goes down or uh, your utility goes out of business or whatever? I mean, the whole system is going to come down. You're going to be on your own, and we don't have the skills collectively that we had 100 years ago. But with the caveat, I hold those certificates because when the great taking comes, if you got money with a broker, you're going to lose it. So make sure you get your stock certificates. And the one company that I had been and involved with since 2015 was Jim's company TRX Gold. That's a mining operation in Tanzania. They basically bootstrapped uh, building plant, building infrastructure. They bootstrap that from cash flow, and they'll be producing somewhere around 60,000 ounces, gold ounces per year. That's going to give them tremendous cash flow. And that cash flow, I mean, I've had many discussions with management. They're on the same page as I am. They want to use a lot of that cash flow to drill because in the last 18 months, they've found two new gold bearing zones with the same markers, if you will, that Buckreef has. So they're going to be drilling the two new zones, Anfield and Stamford Bridge. And that's the reason I originally got into the company, not for production, not because Jim was talking about trying to do dividends in gold. I'm a land man. I'm a land person. After looking at the geologicals on it, I believed, and when I first looked at it, they had a proven 600,000 ounces. Now it's 2 million or 2.1 million ounces, and with these two other zones and the higher prices, which brings more gold into the proven category, this has got to be, in my opinion, it's got to be an absolute minimum 5 million ounces. That's why I own such a big position in TRX, is because of the land. And as it stands right now, gold in the ground is valued at basically nothing. But if you go back to 1980, go back into the 1990s, mining companies were valued based on what they had in the ground. And that's going to happen again. And when that happens, that will be our ultimate payday. People don't even go to the store once a week to buy food. They go every day or every other day to get just what they want for that day. That lifestyle is going to completely change. You also need to think about how are you going to protect your position. If you're in a city, you can't do it. If you're in a city, I would advise find a place out that's rural and move. I know a lot of people can't just do that. But understand if you're in a city, you're amongst a lot of people. And a lot of those people are going to be hungry. If you've got food, they're going to take your food. Um, On my website, there's an icon up top called Grizzly's Corner, and that's been written and put together by I call it Grizzly's Corner as the guy who writes it. I call him Grizzly Adams. He's of that mindset, can go up in the mountains with mules for 6 months at a time and come out no problem.